No, not working. Oh,
Wake up in a panic, we're in over our heads again. We know this is what we're meant to do. So we wake up, put our feet on the floor, go and conquer the day like a warrior, like warriors. Cause that's what a tribe does. We got your back so you can relax and focus on all the important stuff, like getting your business done. This is our tribe. We look out for each other. That's right, that's right. This is our tribe. We help each other grow in business and life. That's right, that's right. No need to panic anymore. We got lots of support and an army of warriors by our side. We fight the good fight when we unite. We fight the good fight when we unite. Cause that's what a tribe does. We got your back so you can relax and focus on all the important stuff, like getting your business done. This is our tribe. We look out for each other. That's right, that's right. This is our tribe. We help each other grow in business and life. That's right, that's right. This
hey, everybody. Okay, let me try that again. Let me turn YouTube off before I say hello. Okay, you can tell I'm very used to having multiple screens, and this one screen thing is throwing me for a loop. Hello, everybody. Happy Monday. Welcome to the Explore ProTech Coffee Shop Show. I am single co-hosting with lots of people to help me out today. So I am in the very, very, very hot Arizona today. So I am out of town on a business trip. So I'm in Africa weather, like yeah, hot. So I'm like, okay, I'm living with you guys. Um, so today we're going to talk about understanding, we're going to stay on the financial topic of businesses, and we're going to talk about understanding business financial statements. Because, even when you get your bank statements in the mail, do we truly understand them? And in business, it's a whole nother level of statements. So I am not going to linger. I have the privilege to let Miss Nestene, our expert on this, talk today. Take it away, Nestene. Tell us about how to interpret business financial statements.
Marlon's literally like, and I chose this show. Oh, thank you so much, Sondra. I wish you would like walk around Arizona and show us a cactus. Like, I'm so jealous.
Actually, I'm looking forward to seeing a tumbleweed.
Do they have tumbleweeds in Arizona?
They do. I have not seen tumbleweeds because I'm in the city. I'm like in town, so that's more outside of town. But I've been sending, yeah, Nestene's been living through my pictures, and I've been sending cactus, and I actually took pictures with cactus yesterday, like standing beside them. So yeah, I'll have to, I think, oh no, they're posted on my Facebook. But yeah, tumbleweeds are a thing at Roadrunners. But I guess it's more of an outside of the city limit type thing. So yeah, they're a real thing.
Very, very cool. We're all going to be stalking you on social media so we can see Arizona and the giant cacti. Okay, ladies and gents, I am going to be your supposed expert for today. I did study accounting, so they're making me talk to you about financial statements for some reason. So I'm going to try my absolute best to not bore you to death, and I promise I will do this quickly. Marlon, it's fine. It's going to be okay. We will be okay. Okay. I'm gonna, so we have another blog post That's published on Business Academy Cafe, where you can see all the stuff if you're like very into financial statements, and I think this will be a good read. But I'm just going to start here. So lots of tips in here, but I'm going to give you the basics. So when you open your set of financial statements, you're going to see a couple of different statements. You're going to see 4 different statements. It's going to start with a statement of comprehensive income. That's also your profit or loss statement, or some people still refer to it as the income statement. You'll also see your statement of financial position, which is also called your balance sheet. You'll see your statement of equity and then your statement of cash flows. So today we're just going to focus on the first 2 statements that make up your set of financial statements. It's your statement of comprehensive income or profit and loss or income statement. And then the next one is your balance sheet or your statement of financial position. So very quick, the statement of comprehensive income, when your accountant hands this to you and points this out, it's not going to always look exactly like this format. Like most likely it's not going to look exactly like this. It's going to look different. It depends on whether you have IFRS, whether you're applying US GAAP, what accounting standards you're basically applying in your financial statements. It's going to make it look a little bit different. But the flow is always going to be this flow. Okay, so I'm going to explain the flow to you. So at the top, what you'll find is a revenue figure. Revenue basically adds up all the income for the year that you made from your core business. So this is the income from your core business. Next up, you have the cost of sales, which is basically the expenses directly attributable to making that revenue. So how much did you spend just in order to make that revenue? It's like your direct cost. It's directly attributable. This is what has to be done in order for that figure to happen, right? And that gives you your gross profit. Once we have the gross profit, we see our other income. Other income is any income that isn't core business income. So it depends on what your business is, what's going to fall in here. Usually it's like investment income, maybe some rentals you receive from a property or 2, interest maybe, anything that's not core business income. Then your other expenses. So other expenses are all expenses that aren't directly attributable to making revenue happen. So they're not cost of sales. They're not the cost of the actual stock that you're investing in, that you're selling, or the person that you are employing to render the services that causes the revenue. There are other types of expenses, like general employee costs. There could be motor vehicle expenses, repairs and maintenance, whatever else is in here. That then gives you your net profit before tax. That's the next figure that we're interested in. And then we have your tax expense, and then finally your net profit. Okay, so that's just how this flow works. That's the basics of it, right? So I hope most of us know this. I think most of us know this. But now let me tell you the interesting bits. So the interesting bits, if you're a business owner and entrepreneur, what you want to know and look at is this. First of all, you want to look at your revenue. You want to compare that to previous revenue and forecasted revenue and the revenue figure that you most importantly want to have in the income statement, right? Revenue drives everything. Without revenue, basically once you have the revenue, it's a trickle down effect that goes to gross profit, and then it's another trickle, and then you get to net profit. So the higher you can get your revenue, the better for all the rest of your figures, pretty much. So revenue is going to show you how effective your sales team is, how good your marketing is, how well your business model is working, how close your product, your market and product fit is. That's what the revenue figure is going to show you. Then if you look at the gross profit figure, what this is essentially going to show you is for your specific type of business, how much margin is there to play with? How much is left after you take off cost of sales? Now remember, cost of sales for us is a figure that we can't avoid. We need to incur this cost in order to make that money, right? So what you're going to see in the gross profit, if this is a very, very low margin, so if gross profit is very, very low, then what you're dealing with is a business that will do this is great. It will do well based on volume. That's important to know, because if you're a business that only does well based on volume, like, for example, our membership side of our business, right?
Yep.
It's a volume game. Then if you have for example, a direct sales strategy in place for a volume-based business, you're going to end up exhausting yourself and your team, not being able to cover all of your expenses. It's not going to be worth it for your sales team. Like for a volume type business, you want to have kind of like bulk marketing in place. You want to be able to reach a bulk audience. It's all about driving the volume. So that's what this margin will already tell you. It's like, are you in the volume-based game or are you in the high ticket game? Like, I sell high ticket items. I don't have to sell many of them, but it's important that my sales strategy is executed really, really well. Now, I don't want to go into too much detail because then I have to go into too much detail in everything. But if you have a volume-based business and you're hitting it with high ticket item type strategies, it's going to cause a mismatch. It's going to cause the business not really performing really well and you not getting to where you want to be, you becoming frustrated and maybe not understanding why. And the same vice versa. So it's important to understand. That's what I love about the numbers. They really break it down. And they show you your business in black and white, in numbers. What does it look like? How does it breathe? How does it make money? What happens if I touch this figure? What happens to the other figures, etc.? Okay, so I'm not going to go into more detail on gross profit. That's what's there. Now, once gross profit happens, the next interesting place that you want to have a look at is your net profit percentage. So we'll talk about that a little bit. Now, if there's a massive discrepancy between net profit and gross profit, then again, you need to ask yourself, what is happening? So it could be that there's a very legit reason. Maybe you have a very human resource intensive business, like a service type business. Then we could expect like a huge human resource employee cost expense in here. Right? And that will then again tell you. So it's not just about looking at a number and stopping at the number. That will then tell you for this specific type business, it's going to be all about focusing on the people. You got to get the people right, recruit the right people, treat them the right way, create the right culture, even more so than in a business that doesn't have a massive employee cost expense, right? You could also maybe in here, you could see massive, maybe motor vehicle cost expenses. Whatever you basically see in here, it's going to, the biggest expenses in here basically tells you what drives the business. Or if you look at those expenses and you're like, what are they doing here? Then that is a good indication that you might want to get yourself involved in some cost cutting and seeing if all the expenses are really, really necessary. Because ultimately, for shareholder return and for return for yourself, and in order to make investments and grow and everything, you want to have as much of the revenue that comes into the business filtering through becoming gross profit, filtering through becoming net profit. Like, it's great. Like, a lot of entrepreneurs get really good at generating revenue, but then if you look at the actual net profit figures that get left after taxes, you're like,
wow, I've got nothing left.
Yeah. So that's the game here. Okay, cool. So I have lots of more different little interesting things that I point out in the blog post because I don't know, I just can't help it. You can go and have a look at them, but I'm not going to spend more time now. I want to rather get to the discussion. I'll quickly show you just the statement of financial position, or in old like terms, we used to call it the balance sheet. So what this is your next statement. So once you're done with your net profit and your gross profit and your income statement, the next statement you want to look at is your balance sheet or your statement of financial position. This is the statement that shows you your assets, your equity, and your liabilities. What's important for you to notice here is how big is the asset base? And is the asset base mainly non-current assets? Is it current assets? Because that's going to tell you, again, what drives this business. It's also going to give you a clue as to what's the barrier to entry in this market. Because if you have massive non-current assets sitting here that are very necessary for this business in order to be able to exist, like why else would they be sitting there? Of course they're necessary, unless they're a yacht and then they don't really belong in here, then we need to move them out. But Usually, if there's massive non-current assets, that would be something like a farm where they spend all of this capital, growing the trees for freaking 20 years. And then only after 20 years do they have like trees that actually start yielding a crop that you can start selling. Now, that would indicate to us if you have that type of capital structure.
Oh, nuts.
Yes.
Oh, nuts.
Like nut trees.
Nuts.
So if you have that type of capital structure, you probably have a very high barrier to entry into the market, which means automatically your competition is a little bit lower and you have a bit more of a market share opportunity there. So that's something that can come out of this non-current current assets idea here. If you have current assets, so if you have a mass amount of current assets, you might want to look at why this is. Are you investing your cash that your business generates wisely? Some entrepreneurs get a lot of cash in and then they kind of have to manage that. And managing that well doesn't always mean keeping it in the bank account. Ideally, you want about 3 months in the bank account, like three months operating costs in the bank account. But that's what your current assets are also going to give you a clue about. And then you start looking and comparing your current liabilities to your current assets and your non-current liabilities to your non-current assets. Now, what this is going to tell you is how leveraged the business is. So this is very interesting, especially if you're looking at a business that you bought into, like as a venture capitalist or something like that, or if you're looking at a potential business to buy into. Because obviously we don't want the business to be over leveraged. We don't want the business to potentially not be able to exist and pay all its debts as they become due, etc., etc. Like we want it to be a going concern. But at the same time, if you have a business that has no debt, there's a reason why they call it leverage. It's like a lever. It's supposed to, the right type of business, if you put borrowings into it or more funds into it that come either from equity or from borrowings, what happens is the revenue is supposed to skyrocket, because the idea is if you have a really good business concept, it means you discovered something that if we put more money on the top, it makes more money at the bottom, right? So like a little machine. So then it becomes interesting if there is some borrowings involved and the business can actually show a return for those borrowings and an increased growth rate because of that borrowings. So those are some things that you can start playing around with. I'm not going to take up more time because I feel like people might start walking away or falling asleep. But I really want to hear your voices. So ask me anything, go for it, or comment anything, add your insights, let me know what you want to know more about. And then if you want a bit more detail on all of this, like there is a lot of more detail in the blog post as well. So you can have a look at that. So that's it from me, Sondra, for now.
Thank you. Oh, no, sorry. Yeah. It's a lot of information, and I know I'm not a numbers person per se, so I know it can be very overwhelming. Where would you tell somebody to start? Because like 3 statements and leveraging and like even somebody who's been in business for a bit, I got overwhelmed. Straight up. That's just me being honest. I mean, I have a bookkeeper, so I know she runs numbers and stuff, but I trust her to tell me what the numbers are as far versus me understanding all 3 statements and stuff. So, but if you don't have a bookkeeper, where do you start? So like a starting point, because I think as small business owners, sometimes we're like, forget it, we're not doing numbers because it's overwhelming and it's hard. And as long as I'm paying my bills. So where would you suggest people to start while people raise their hands to ask questions?
So if you don't have a bookkeeper, I would say start with talking to a bookkeeper and doing some kind of energy exchange so you can get a freaking bookkeeper. But then on top of that, like just to know your actual numbers, just start knowing what your revenue is and what drives the revenue. I would say start there, because you need to know how much money you're making and what exactly it is that you need to spend in order to make that money. Like you need to be able to differentiate between necessary expenses, essential expenses, and then not absolutely necessary expenses, because that's the business model. So if you and also if you just start spending a bit more time with your numbers, you'll be surprised at how quickly it gets less overwhelming. So the more we spend time with them and we try to understand them and understand the story that they're trying to tell us, and if that is difficult for you to do right off the bat, then make friends with someone like me, because there's a lot of things that I find terrifying. I hate sales. Ask Marlon. I'm not I don't like it. I'm not creating another funnel. I'm just not doing it. It's not me. But I'm very willing to sit with Marlon and have a look at his numbers if he's willing to figure out all my sales crap. So I would say that
Yeah,
is a great place to start.
I think that's so what I'm hearing you say, 'cause you're still using very big words, my dear friend, is writing everything down. So as I say in brain dump the numbers, all the numbers, both sides, all the numbers into one spot, spreadsheet, handwritten, wherever you need to dump all these numbers, but dump all the numbers and make sure you're looking at stuff that you only pay once a year, because I think that's the things that I get caught up in is sometimes those yearly costs sneak up on me and I'll be like, oh yeah, you know, the LLC and the domain and the insurance are all due in the first quarter. If I don't have a good fourth quarter, then the first quarter is a huge stretch financially. And you would think I've learned the lesson, but we're a work in progress. I think this was the first full transparency. This is the first year. It was not a how much credit do I have to pay all the expenses? So I actually finally have learned the lesson and made things a little bit easier. So, but yeah, I think that's the biggest thing. Dump all the numbers. And if you don't know what numbers to dump, then look at Nestene's blog so you can figure out what numbers to dump. For sure, for sure. Rob, come on in on the conversation. I'm sure you are a numbers guy, Mr. Accountant.
No. Mr. Training of Accountants doesn't mean Mr. Accountant.
Okay. Yeah.
Come
I
on,
get that. No,
Rob.
training is different than being. I truly agree with that. I said I can train a lot of people. I can coach a lot of people on goal accountability, but that does not mean I need to know your business and be an expert in it to do it. That's your job to be an expert.
No, exactly. And an expert is someone from out of town with a briefcase and a nice suit. So Nestene, yeah, just on that topic, I mean, in simple terms for kind of me to get started would be kind of income and expenses to look at profit and loss. I mean, that's my kind of go-to, and I would suggest getting control of that can be quite easy in like Excel's or whatever the case is. And if you detail all your expenses, and then you can eventually kind of build up, okay, what are your recurring expenses, put in your ad hoc expenses, and then that, I mean, correct me if I'm wrong, Nestene, but that would form like the very basics of like a income statement, right? Yeah, I mean, that's way over my pay grade. The accountants do that on my behalf, but for me personally, as long as I've got a bit of an understanding, is like, hey, are we making a profit or are we making a loss?
I think that's exactly right, Rob. And I think on that note, also, if you don't want to write everything down yourself, a great app that I would suggest is 22/7. It's literally like the number 22 and then spelled 7. And it links to your bank account and it pulls in all the data from the bank account and it gives you your total income. It gives you your total expenses. And then it also like starts like working with you to help you kind of figure out your stuff. So I think that's a great tip. Thank you.
Thank you. And I put that in the. I'm sorry, I'm trying to do the live show on the other device, so I'm not ignoring you. In the US, one that's good is called Wave, the Wave app, and it'll link to not only will it link to your bank account, but it'll link to your credit cards. So if you're using business credit, it's a good one. You have to, like all apps, you need to reconcile it and stuff. So that's what my bookkeeper is really good at, is reconciling and making sure all the numbers are in. But I have everything going into there, and then yeah, I can go in and pull up all those different statements. Did you want to speak, or is that Peter's hand back up? Peter, go for it, Peter.
That would be me. I think we need to take into account all entrepreneurs are extremely different. I'm an extreme dyslexic. Reading the numbers for me would not tell me the same story. It could tell me a different story every time because everything is backwards. So what we need to understand is that, everybody, there are people that have the ability to read the numbers, and there are people that do not have the ability to read the numbers. And I think reading the numbers is an art. It's basically taking the numbers and creating a story that can be told, and that story indicates where your business is at. So if you're an entrepreneur and you don't have the ability to read the numbers, it doesn't mean that you don't need to learn. What it does mean is that you do need to find an accountant that is able to translate those numbers into an actual story. However, there is a disconnect between the entrepreneurs and the accountants. The accountants crunch the numbers, but they don't tell the story to the business owner. They go, your numbers are crunched, you're good. But that doesn't tell you where you need to change, what you need to chop. It doesn't tell you the story to the numbers. So I think this is where accountants and business owners, there needs to be that middle ground. So I think it's not only about finding an accountant. It's about finding an accountant that understands your business. It's about finding an accountant that has the ability to take the numbers and translate that into a story and tell you that story in such a way that you understand what it is that you need to change based on the story that is told. And I think that's the disconnect, where the accountant has gone, I've crunched the numbers, I've done my job. And the business owner is going, my accountant has crunched the numbers and the job is done. But the job is not done, because the story that the numbers tell needs to be told to the owner of the business or the entrepreneur so that they can make informed decisions as to what do they do next? What do they change? What changes can they make to effectively increase or affect those numbers? So I think for me, having an accountant that can actually tell the story. Often, if Nestene had to come to me with a spreadsheet and go, these are our numbers, I'd be like, great. That doesn't tell me anything. But if she tells me the story behind the numbers, it gives me the ability to be strategic in what do I change? How do I make those changes? How do I increase those numbers? So I think that's actually very important for both entrepreneurs and accountants to understand. It's about creating that it's almost like translating language. An accountant translates the numbers and relays the story that the entrepreneur can understand to effectively make changes.
It is an exceptional day when you actually find yourself with an accountant that is acting as a partner of your business. It's really a fantastic game changer. So maybe what I can challenge you to do is, if you do have an accountant and you have been viewing them as, great, you did the numbers, you filed the tax return, I'm not going to talk to you again, thank you so much. Ask them what's their opinion on your business, because you would be surprised. For the clients that when I was still doing accounting for people, for businesses and clients, like a lot of the times I did the accounting, a lot of the times I was involved in the advisory, but then I did have the clients where they weren't interested in advisory. They literally just wanted the tax return filed. And I always, when you work with the numbers that closely and you can actually understand and interpret them, you always have something useful to say. Like, you always can say something like, have you thought of this expense? Like, this is the whole reason why it's not working out. Or if we just cut on that, then this would double. Or like things like that, we can actually point that out, but you have to have the right accountant and you have to ask them the right questions.
Yeah, I think, oh, sorry, Peter.
Oh, no, sorry, carry on.
Relationship, I think there's the key word. You have to have a relationship with your bookkeeper and not a relationship that's once a year. And Kelsey was saying that too, because tax returns were due last Monday in the US. April 15th is tax day in the United States. So I don't think y'all realize that, but yeah, it's so on topic to be talking about finances in April, because that's everybody's mind, personal and business. So, but Kelsey was saying that too, that, I waited too long to have the conversation, and then the conversation is highly emotional and highly intense because, you haven't looked at anything at 6-9 months, a year. And then you're like, wait, why do I owe taxes, or why didn't I make a profit? So going back to what I tell everybody, including myself, is, at least quarterly. Yes, monthly would be ideal. But in the realistic world, sometimes that just doesn't work. So quarterly. So Kelsey and I were just saying that we are like, I've sent my stuff to the bookkeeper, but I have not scheduled an appointment. So I committed for accountability with Kelsey on the live stream that we would make appointments with our bookkeepers in this week so that we can get our numbers done. And Gareth was saying that yes, he's up to date on his numbers for the year so far. And Mr. L was talking about, we're not all accountants, but we need to have a basic understanding of our numbers to run a business. So I think that's super true, super true. I want to bring Hendrick back in because he put that hand up and he went right back down. Come on, Mr. Hendrick. I've seen that hand. I don't know why you playing. Good evening.
Good evening, everyone. No, it's actually, it was addressed by Rob just now, and also Peter, because what's important about having an accountant and understanding what the numbers mean, it actually goes hand in hand. And I learned this almost the hard way because initially I had an accountant whom I believed that he was doing everything for the company, only to find out when I changed accountants that I was supposedly paying SARS, but I was actually owing SARS a lot of money. So it's very important to have that understanding of what the numbers mean, and also when you are the reports or your statement to interpret what they.
Oh no, it's good. Yeah, I got the gist of it, Hendrik. So yes, very important to know all the levels of the numbers. I think sometimes, we look at revenue and profit and loss. That's it. Did I make money? Did I make money? And I used to say I didn't have a profit goal. I had a service goal of servicing so many people. That did not service me very well as a business owner. In truth, like relationship and coaching wise, it was great. Like I had X amount of clients. That's great. But if you make zero money, then you can't keep servicing clients. So it was definitely not a win-win. And I had to change my mindset around that because I'm like, I don't want to be wrapped up in all the numbers. I don't care about the numbers. I just want to help people, yada, 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 which that's called charity, not called a business. Let's just say that the debt piled up, and I learned my lesson the hard way. And I do love helping people, but in the end, I'm a business, and if I want to be a business owner that stays in business, then I have to make money. So I just have to go around those numbers. So definitely true. And Kelsey and I were just talking about, it's really not about what system you use, it's about you using the system and understanding it. So whether it's the app you were talking about, she was talking about QuickBooks, I was talking about Wave. I'm like, it's not really about what you use, it's about as long as you use it. Because I have people that set up systems and they never use it, or they have 15 systems and they don't know crud about what any of them do. When I do system audits for clients, I'll be like, do you realize you have 20 systems and you pay for 15 of them, and you could probably pare that down to 5. Like seriously. But same thing with bookkeeping. If you don't use a system, then it won't matter. My CRM had a bookkeeping feature in it, but it wasn't really good. So we moved to Wave because I was like, I don't know how to use it. And she's like, when I got the bookkeeper, she's like, let's move to Wave. Don't need QuickBooks. You don't need to pay for QuickBooks yet because I wasn't ready for that. But she knew like what level of accounting system I needed, and that's how that got picked. And then that's what we've been on. Though I have a funny feeling hopefully I will get to level up and use QuickBooks because I have to. We'll see. Peter, go ahead.
Yeah, I think I want to take the opportunity to actually create a bit of a shout out. I mean, although Nestene is a chartered accountant and other things, we actually have an accountant, actually more than one accountant. And these are accountants that we actually have built relationships with, that we can approach and go, tell me the story of what the numbers look like. Tell me the story of, give me your input into my business. And I think it's so important. So for the life of me. Monia. So for me, it would be a great opportunity to actually do a bit of a shout out to Monia van Sale, who, although we have an accountant, is our accountant. And the relationship in place. I mean, when we go up country, if we fly from Cape Town and we go up to Johannesburg side and end up in Potchefstroom, and she finds out that we're in Potchefstroom and we haven't booked her for a coffee, then there's going to be a problem. Somebody like that has their input into your business. As your accountant, they see that your success is them successfully being your accountant, if they're telling you the right story. So a huge shout out to Monia van Sale, also a shout out to Sippy Sobotsky in the background. And these are people that have all had inputs into our space. I think if you surround yourself with people like that and they understand what their role is in your space.
Susanne also does bookkeeping.
Susanne also does bookkeeping.
Yeah, she's Monia's
Yeah,
support system.
Monia's support system. You really need to see relationships like that in your business as an asset. It's a huge asset, actually, because when people like that give you feedback and advice, then with an understanding of the numbers and being able to listen to that story, you can actually then be strategic. And now it's very difficult to be strategic if you don't know what the numbers are. So if you can't read the numbers, find somebody that can. Also find somebody that can translate that into a story, feed that story back to you so you can then go ahead and be strategic. That would be in my case. I know that everybody else is different. Some people have the ability to read the numbers and don't need an accountant.
No, I'm sorry. Like, if you're an accountant, like having your own accountant is like the ultimate.
It's
like the ultimate sign in life that you've made it. You know, you're like, Monia, why don't you just invoice those people? It's amazing.
Yeah, absolutely brilliant. So a huge shout out to Monia van Sale and Sippy Sobotsky and to Susanne in the background.
Yeah, so true, so true. And I think taking action on those numbers. So, it's not all about the goal, but it's about the action plan. So taking action on those numbers, guilty of not doing that, might know the numbers or give them the numbers and be like, okay, next. So it's not only about understanding the numbers, but then it's about how do you pivot? How do you come up with a plan to fix the numbers? And if the accountant doesn't know, then get the right people in your corner, a business coach, financial coach, whatever that is. I have both financial coach and a business coach and a bookkeeper, and I'm very big on coaches need coaches because I am far from the expert in all those areas. So I'm learning, and I've actually been able to teach my adult kids about the financial because I've been coach for 2 years, and now they go to me and go, "What does X coach say, Mom?" I'll be like, "Okay, just go hire your own coach." No, I'm the coach, which is fine. But yeah, it's definitely important to not only know and understand, but then take action. Because if you don't take action, then nothing's going to change. Doing the same thing get you the same exact results, especially with the world that's, financially is struggling in a lot of places, in a lot of countries. You got to do different if you want different results. So that was part of rebranding. I wanted different results. Really, it was to level up and to get different results. Mr. Rob, come on in.
Thank you. Yeah, I just wanted to say from my side, like the main thing I get away from all the, because we've got like internal accountant, external auditor, and there's a lot of papers. So, but for me, the thing that I look for is the trends. So obviously a brand new business still has trends, maybe not based on last year, but it'll have weekly trends, monthly trends. And you can instantly get a picture of kind of where you're going, and you can, the quicker you can spot a trend, the quicker you can kind of fix it or intervene to fix it. Because if you're saying you're doing things monthly and you're a startup, a month might be too late. You might need to know week on week what's going on. And as long as you don't have to be yourself like a super accountant, but as long as you've got those basics, at least income and expenses, and you can see Okay, well, shit, this week we're losing money. That's not good. Look at, what happened. Oh, we gave a bunch away. Bad idea. Let's not do that next week. Let's try and keep some.
Yeah, so true, so true. Yeah, for sure, for sure. So Marlon, you're being nominated to speak and you don't even know it. So I'm curious, Marlon, have you created an app yet for bookkeeping? Like, tell us, Mr. Creating apps and changing the app world. Do we have a bookkeeping app yet?
We don't have a bookkeeping app yet. This is like, there's certain places I just steer clear far away from, and one of them is bookkeeping. So look, the numbers side of things are really important though. It's really a world that, like Nestene was putting me to sleep just now, but what was most important, I feel, is especially now at this stage of my business is around the profit, because it's one thing to make money, and then then there's always an expense to that money, and that has so money comes in, goes out, but how much is actually staying, so that you can actually grow the business. And then what Nissim was talking about, which is really important, and I'm really still learning, is that portion that's left over is not for you. That portion that's left over has got to be plowed back into the business so that you can get to this critical mass, because there's a lot. It's around the management is the words that she was using. So those real things like that net profit thing is what a big focus. What's left after, how do you trim the fat in terms of those expenses and just keep things as lean as possible, especially in smaller businesses where we don't have big teams. So, because a big expense could be manpower, right? But if we're outsourcing that is even larger expense. So getting to understand that, especially in a service-based business as I am, how to measure that up and how that correlates to time, because again, depending on my business, which is service-based, it depends on how much time is, it depends on efficiency. So yeah, those numbers are an accountant for those purposes, because what I would do is I'm kind of like Peter. I'm not necessarily dyslexic, but just give me all those numbers, and I still don't get it, right? So what I would ask them to do is like, can you just draw me a picture? Because if I can get like some graphs, because that's how I see things. If I can get graphs, a pie chart, and that's what I actually had to do. I had to like change these things, and that's what I love with all these accounting softwares now, is that you can put plugins into that can interpret the data. Yeah, 100% visual learner. And you can get your accountants to help you like that, and then you interpret the information better. They can speak you through it. I found that bookkeepers don't quite understand as well as an accountant in terms of being able to direct you, because they sometimes are the ones that how they record the information is then how your books are then tallied at the end of the day, and what creates a balance sheet. So how it's actually created in the beginning. So if they're separate people, your bookkeeper and your accountant, you got to get them speaking to each other so that you can meet in the middle. So that's about all I have to say on the subject. But yeah, I'm hoping to hopefully do something in the space. So yeah, thank you guys.
I love that. I love that. And the other thing I want to say is, one, it's great that you know that you're a visual person. So somebody giving you a spreadsheet is going to be like, no, that's not me. Give me a graph. So I think that's a really good point, is knowing as a business owner, what type of learner are you? Do you need somebody to talk it through? Do you need graphs? Do you need just a spreadsheet and you're good to go? So that's extremely important. The other thing I want to touch on, because I know I'm getting to know Marlon, hopefully we'll be working together soon, but is that he owns multiple businesses. So keeping track of multiple businesses is a whole new level than one business. Yeah, he's got a piece in all of those. Some of them he owns, co-owns, whatever, but he's got to account accountant, he needs to have an accountant for each spot so he knows what's going on in each business. And I do work with multiple business owners. So, which when I did the quarterly review is why we separated. Well, that's why there's a multiple business quarterly review book. It's really important when you have multiple businesses because you wear many, many, many hats. Sometimes you might be the co-partner, sometimes you're the owner, sometimes you're, I don't know, contractor or whatever. So keeping that all straight takes a lot. So making sure you have somebody that does it either for you or with you, and that we review it at least quarterly, so that you can stay on top of that. So one business doesn't kill the other businesses. I've seen that happen where one business has drained 2 or 3 other businesses because they just couldn't manage it all and the funding wasn't kept separate and all those legal things that need to happen. So I've watched businesses fold for multiple business owners because 2 or 3 were attached that should have never been legally attached and they didn't know or they didn't understand their numbers. And they went from 4 or 5 businesses down to 1 because they totally screwed up and had number issues. So very important for my creative, amazing entrepreneurs with multiple businesses that they keep those separate and that they know their numbers for each business. Yes, and usually that's your livelihood. You're living off of 2 to 3 businesses. So if you don't keep track of those 2 to 3 businesses and they start crashing, then that's your income. So just great reminder to make sure multiple business owners keep those all separate, but also know exactly what's going on in each one. Come on in. I don't know, Peter and Nestene look, like I said, both of you look like you're ready to like jump. Come on in, Nestene.
My turn. Marlon, for someone that isn't like an accountant and wants nothing to do with numbers, you have a lot to say about them. I love it. It's awesome. Have you been listening to me finally? No, it's great to hear what you. It's great to hear what
Definitely
you have
all
to
your
say. I promise you, Marlon, you're gonna like 22/7. It's not a bookkeeping app, it's a budgeting app. It makes little graphs for you. So it makes it as visual as possible, especially with all the different businesses, because we have now multiple businesses as well because of Rob in our lives. He's like ADHD in business.
Guys, I have a question. Can I ask a question quickly?
Yeah.
So, as financial people, accountants, what do you, I mean, we're in the world of small business, right? What do you think? Because many small businesses live out of their business bank account. And then, I mean, then you have to kind of do magic to, sort of show something, but that is compliant, in a way. And my experience of that is that that's a never-ending cycle of that actually takes you in the wrong direction. So what is your take on that, on other entrepreneurs that maybe that business is a way out, to really start earning more money, but with that money, you got to be more responsible. And how do you help people just navigate that?
So I would say, if you are good with numbers and you're really good with, like, you're going to actually keep track of them, then living out of the business bank account for a while is not that big of a problem because you will be able to manage your budget, manage what you take, figure out what that is and put it back. If you are Peter, you get your own account. That account gets locked down and you do not get access to the business account.
By choice.
So if you can afford it, and also even if you're good with numbers, but you're not going to put in the time to figure out like what did I take that's personal, what's business, then rather just have 2 accounts, get yourself 2 accounts and have a personal one, have a business one, have rules for yourself. At the end of the day, I know I can pay myself 10,000 Rand or 5,000 or however much I pay myself salary, make it a fixed amount so you don't the last thing you want to do is keep that personal one escalating. It needs to be a fixed amount, comes out. When you spend that on personal stuff and it's done, you treat yourself like an employee. You don't get more until the next payroll date. Okay. So that's what I would say. Because you don't want to live and kind of like eat the pie you're trying to grow. You know, you want to kind of like have that pie become a bigger pie and then a cake with 3 tiers. And the only way to do that is to work out what you need on a monthly basis, be realistic about it, make it as low as possible. Peter's good at that actually as well. And then, you know, that's what you take personally. You split the monies. The business keeps the business's money and you get your allocated monthly money to live on. That's what I would say. I just want to give you a quick tip because I know Peter wants to jump in, but with the ChatGPT, oh my goodness, you're gonna love this. You take your bank statements, delete your account number, anything personal on there, your name, whatever, all of the personal stuff, take it off, keep the figures, dump the PDF statements into it's called data analyst. It's a custom chat GPT called data analyst. It's the old code interpreter GPT version. You dump it in there in PDF, and then you can literally ask it to you can ask it like calculate my important ratios that I should know about for this month to be able to manage the business. You can make it as vague as that, and it literally dumps out a dashboard for you. Like, I get so nerdy about that. It's so cool because it's like it's really cool.
I get it.
It's like what we would do in the financial management department, like for our clients. Like, we would have to do that manually. And now you just like literally dump that in ChatGPT. It's called data analyst. You can put in, if you have your numbers in Excel or whatever, you can put it in an Excel, but you don't even have to. You can upload PDFs. And then you just ask it. And then you can ask it questions like, what was my total revenue from this? From the numbers that I put into you, what expense do you think should I focus on cutting? And do you have some suggestions for that? Can you work out how I can make net profit higher next month just based on what like the trends that you have now? Really cool. It does graphs. It does like pictures. You can tell it like, I hate numbers, make me pictures, and it will actually do that. Now, how accurate it is going to be, it's like it's like a 70% chance that you're going to get sufficiently accurate information, but I think it's worth trying, and the technology is only getting better. So I just wanted to put that out there. I think it's really cool. Data analyst Marlon. I'll put it in the live chat on the YouTube stream, and then I'll put it in the Zoom chat just now as well. Okay, play.
No, go ahead. Do you have anything?
Oh, yes.
Do you want to add something? Yeah, and then we'll start wrapping up. Go ahead.
I just wanted to reiterate something. If you are not good with the numbers, do not be fooled. The business money is not yours. And I think Marlon, you highlighted that, and that's a big trap that everybody falls into. And I see Grant also responded to that in the chat as well. I think it's very important because, and also Grant, you refer to it as a pie, that you're eating that pie. You're basically destroying yourself from the inside out. So just because the business is doing well, doesn't mean that you get to spend like you're doing well the business money. That is a huge trap. So to keep it separate so that you can have real information on your business, setting up the second bank account is actually really important, because if you keep it all mixed together, but you're using that money in a personal capacity and for the business, it gets very confusing, and reading your numbers will be a never-ending terrible story that you can't really interpret or tell what went where, how, when, why, what. The story just gets so confusing, and then an accountant comes in to fix it, and they're like, what did you do here? Where did this go? Where did that go? And you can't answer. You don't know. Oh, I had all this money. Where did it go? Oh, I don't know. Keep it separate, and keep the business money as the business money and your personal money as your personal money. Then your business can tell an accurate story, and your personal account can tell an accurate story. You know what you spent in your personal capacity, and you know exactly where your business is at. And I think that's very important. Just don't give me access to the business account.
Right. I do want to point though, you can pay yourself. You just have to account for that in your business account. yes, you should pay yourself. And that is something I've been guilty about. All the money keeps just going. You can choose to not pay yourself. That's true. But I mean, it does make sense to pay yourself, but account for it. So you're an employee of your business. You market as such, and so on and so forth. And business credit is the same thing. They ask you, are you an employee of your business? Of course you are. You're going to pay yourself. It's your business. But I've been known to answer that question wrong and get denied credit. So in the US, it's a good question to make sure you say, yes, you're an employee of your business because you are. You want to be. You want to make a profit so that you can choose to pay yourself. And what you do with the money when you pay yourself, whether it's invested back in a business or start another business or go on a nice little vacation, then that's fine. But that's your money to do with whatever you want. We're not saying don't pay yourself because we definitely want to make sure people are paying themselves. Time is up. Time always flies. So I think I'm done with being nervous about can we fill the time, because I have yet to not be able to fill the time. I think there's been one in the last 9 months where I'm like, I don't know if we're gonna fill the time, but we always fill the time. I'm always grateful for everybody. Thanks, Gareth, Mr. L, and Kelsey for interacting with me on YouTube. I always love that too. They always have good questions and suggestions. And of course, I love having blog posts written by our expert panel. So that's very helpful. And I want to give a shout out to Susan for doing our cover, our show notes. You can always click on our show notes and you can find our LinkedIn links. So you can set up coffee chats, whether you want to talk to Nestene about numbers, Peter about the community, Marlon about the amazing apps he's creating, or Rob's Business Academy. All of us have our links in there. So you can click on those if you want to talk to me about goals and accountability. Just ping me on LinkedIn and I will get back to you for sure. And then Somerville also helps with social media and blog posts and stuff like that. So don't always mention her, and I want to make sure you like, share the show, and then also go on Spotify and share our podcast so we can keep reaching more and more people. The more people like and share, the more our outreach spreads, which not only helps us, but it helps you because it gets you eyes on you and your knowledge. So I am Sondra, your goal accountability coach from Get It Done Coaching. I help you not only set goals, but create bite-sized action plans to get things done. I'm going to let Miss Nestene wrap us up.
Thank you so much, everyone, for being here. You are absolutely amazing. Those of you here in person and on the live stream, we absolutely adore you. And you know what? I have a feeling those numbers are going to work out for you. They definitely are. So until I see you next time, may all your wildest entrepreneurial dreams come true. Bye.